If you hear about cryptocurrency, chances are high you have heard about Bitcoin. Bitcoin is the synonym of cryptocurrency. While there is so much happening in the crypto world, beginners interested in this field wish to know more and more about different cryptocurrencies. So what is Bitcoin? How does it work? To learn all about BTC, keep on watching this video. Hey guys, welcome back to Crypto Animations, the channel where we explain to our viewers the different types of cryptocurrencies and everything new investors should know. In today's video, we will talk about what BTC is, so be sure to be attentive, because you clearly don't want to miss out on an amazing opportunity to win a giveaway of a $25 crypto coin of your choice. Also, if you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. Now, with the intro out of the way, let's get into our topic for today. There's not a week that goes by when Bitcoin isn't making headlines. But unless you're a trader or interested in cryptocurrencies, what it has probably flown right over your head. Bitcoin cryptocurrency is a type of money that is virtual. In simple terms, it is a computer program that enables people to exchange the value of money directly with each other. Bitcoin is the first cryptographic commodity, a blockchain, that can be exchanged like cash protected through cryptocurrencies. Trading in Bitcoins is anonymous without any intervention from brokers and intermediaries. In the 90s, Cypherpunk was a group that worked on security models using cryptography. The team used advanced mathematics to protect commerce, finance, and communications. The development from these cryptographic protocols led to the creation of Bitcoin, which promoted individual empowerment and distrust of the state. BTC was created in 2009 by an unknown person leveraging the alias Satoshi Nakamoto. It was the first digital money that promoted the peer-to-peer electronic cash system. A public ledger records all Bitcoin transactions, and copies are held on servers worldwide. Anyone with a spare computer can set up one of these servers known as a node. Consensus on who owns which coins is created cryptographically across these nodes, rather than relying on a central source of trust like a bank. Every transaction is publicly broadcast to the network and shared from node to node. Every 10 minutes or so, these transactions are collected together by miners into a group called a block, and added permanently to the blockchain. This is the definitive account book of Bitcoin. In much the same way you would keep traditional coins in a physical wallet, virtual currencies are held in digital wallets and accessed from client software or a range of online and hardware tools. 7 decimal places can currently subdivide Bitcoins. 1,000th of a Bitcoin is known as a mil, and 100 millionth of a Bitcoin is known as a Satoshi. In truth, there is no such thing as a Bitcoin or a wallet, just an agreement among the network about ownership of a coin. A private key is used to prove ownership of funds to the network when making a transaction. A person could simply memorize their private key and need nothing else to retrieve or spend their virtual cash, a concept known as a brain wallet. Furthermore, Bitcoin does not undergo printing of bills or mining of coins. It is completely autonomous. It is not under any financial institution, bank, or jurisdiction control. Moreover, no transaction details or users' details are recorded because of its anonymity. Transactions are formed through a process called Bitcoin mining. In simple terms, mining is an extraction method. In this extraction method, computational algorithms become a part of a challenging mathematical puzzle. So when one mystery is solved, one mining block is mined, and the user or programmer receives a reward. That reward is a Bitcoin. Anyone can use, buy, and sell Bitcoin through cryptocurrency exchange platforms and apps. But unless you have tens of thousands of euros just now, it's unlikely you'll be able to afford to buy even one Bitcoin token. You could buy a share, though. Small denominations of Bitcoins exist, called Satoshi, after the crypto's founder. One Satoshi is worth 0.0000001 Bitcoin. The digital payment company Square and its CEO Jack Dorsey, the CEO of Twitter, have been big proponents of Bitcoin. Overstock.com also accepts Bitcoin, and in February, BNY Mellon, the oldest bank in the U.S., said it would include digital currencies in the services it provides to clients. MasterCard also said it would support select cryptocurrencies on its network. Bitcoin has become popular enough that more than 300,000 transactions typically occur in an average day, according to Bitcoin wallet site blockchain.info. Still, its popularity is low compared with cash and credit cards. The value of Bitcoins has gone up and down over the years since it was created in 2009, and some people don't think it's safe to turn your real money into Bitcoins. Every transaction is recorded publicly, so it's complicated to copy bitcoins, make fake ones, or spend ones you don't own. It is possible to lose your Bitcoin wallet or delete your bitcoins and lose them forever. There have also been thefts from websites that let you store your bitcoins remotely. This concern was expressed by the head of the Bank of England, Andrew Bailey, in October 2020. He said that he was very nervous about people using Bitcoin for payments, pointing out that investors should realize its price is extremely volatile. By this, he meant that the value could drop significantly at any moment, and investors could lose a lot of money. The dual pull of supply and demand has always been responsible for the fluctuation of asset prices historically. The rate at which new bitcoins are produced is controlled via the platform's internal protocol, and if demand for them rises beyond what is available, the price naturally soars. Furthermore, there is a cap on just how many coins can be in circulation. As of now, that number is 21 million. After that point, mining will no longer generate new coins. Once that cap is reached, there will be no new coins, meaning the price can go up or down depending on how much demand and the competition handles it. Bitcoin's market capitalization has led to many other altcoins coming out. There are hundreds of alternate cryptos, which is good because investors get to pick and spread their investments across many products. The diversity keeps prices from rising monumentally. However, since BTC is still the undisputed leader in market capitalization, most revenue goes to it. Bitcoin's bullish penetration into the global economy has caused countries to take note of it and try to define it. The trouble is that nobody has a classification for it, thus leaving a lot of uncertainty regarding how it should be categorized and treated. Due to the legal gray area surrounding cryptocurrencies, this can affect prices in two different ways. Firstly, it gives people who can't afford Bitcoin access to it, increasing demand. Secondly, powerful investors who make predictions about the value going the other way can bet on its parabolic uptrends and downtrends. The old standby Bitcoin is a worthy addition to any portfolio if you can afford it. Often regarded as volatile because of its many steep price drops, Bitcoin consistently rises again to levels much higher than its previous peaks, including reaching a record high of $69,000 in November. Although Bitcoin comes with a higher price point that dents profitability in the short term, experts still consider the oldest cryptocurrency an intelligent bet for long-term holding. Some investors expect incredible price surges in 2022, including one prediction that Bitcoin will reach $250,000 by the end of 2022. Bitcoin tends to be an indicator of general trends in the crypto market, as it is by far the biggest cryptocurrency, and the rest of the market tends to follow trends first seen with Bitcoin. In 2021, Bitcoin's price reached an all-time high at over $68,000, but it dropped lower than $30,000 in July. It is precisely this volatility that has experts encouraging potential investors to keep their crypto investments to under 5% of a portfolio at the start. According to Time.com, several experts believe it is only a matter of time before Bitcoin hits $100,000, meaning 2022 might well be a good time to invest in riding that wave. If you are to invest in crypto in 2022, it is advised to keep your investments small and to never put crypto above other financial goals such as saving for retirement or paying off debts. Well, guys, that's all we have for you today. What are your thoughts on Bitcoin? Let us know in the comment section down below. If you guys like this video, then be sure to give this video a big thumbs up. Also, if you don't want to miss out on any new future videos, then be sure to click on the subscribe button and turn on the notification under this video so that you're notified the next time we upload a video on the latest cryptocurrency news. Thanks for watching. We hope you have a great day today, and as always, we'll see you in the next video.